The blend of manipulated trust and real-time payment rails does make this a form of fraud especially difficult to reverse. So AI is being used both to commit and to detect this type of fraud. It's basically fueling an arms race between criminals and institutions.
Welcome to Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance.
Hello and welcome to Treasury Payments. We're at a moment where the boundaries between fraud, cybersecurity, and compliance are converging faster than many institutions are ready for. AI is reshaping financial crime by enabling new threats, but also by transforming how we are able to detect and respond to them. Here at the BAFT Global Annual Meeting in Washington, D.C., I'm joined by Deepa Sinha from BAFT and Elizabeth Rosenberg from the Wolfsberg Group to help unpack what this all means for banks, regulators, and the compliance teams today. Deepa, Elizabeth, welcome to Treasury Payments. Now, before we start off, I just want to do a quick round of introductions. Who are you? Where are you from? And what do you do? Deepa, let's start with you.
Thanks, Carter. I'm Deepa Sinha, SVP for Payments, Financial Crimes, and Women in Transaction Banking at BAFT, which is the Bankers Association for Finance and Trade.
Elizabeth?
Thanks. I'm Elizabeth Rosenberg. I am Global Financial Crime Executive at Bank of America, and I'm also a member of the Wolfsberg Group.
Deepa, I want to start with you. So your session focused on the convergence of fraud, cybersecurity, and AI. So what's the most significant shift that you've seen in the last 12 months or so?
Thanks, Carter. There's been a few shifts. In 24, 25, we've seen generative AI being weaponized by fraudsters to scale phishing, spoofing, deepfake attacks, bypassing the traditional verification methods. This marks a shift from low-tech scams to AI-driven fraud ecosystems. Also, financial institutions are increasingly leveraging machine learning and networks to detect fraud patterns in real time. And AI models now assess behavioral metrics, keystroke dynamics, and transaction velocity across channels. And these systems continuously learn, adapt, and flag outliers without relying on static rules. APP, authorized push payment fraud, has surged globally, I think, exploiting social engineering and, of course, the AI-generated content that we've been seeing. The blend of manipulated trust and real-time payment rails does make this a form of fraud especially difficult to reverse. So AI is being used both to commit and to detect this type of fraud. It's basically fueling an arms race between criminals and institutions. In terms of regulatory bodies, they're focusing on AI governance. So explainability, fairness, auditability, and accountability. The EU AI Act, for example, as well as emerging U.S. frameworks, are beginning to shape how AI can be responsibly deployed in cybersecurity and fraud detection. Financial institutions now have to balance innovation with compliance and reputational risk. There's a growing push for cross-institution data sharing, and federated learning models to detect fraud patterns beyond organizational boundaries. And this marks a cultural as well as operational shift in cybersecurity strategy, moving from siloed defense to ecosystem-based resilience.
Yeah, so a lot of those changes, I would imagine, comes with different regulatory adaptments and approaches that governments are taking to kind of get ahead of some of those challenges that we're seeing. So Elizabeth, from your vantage at the Wolfsberg Group, how are financial institutions adapting to some of these regulatory pressures in this very rapidly changing threat landscape?
Thanks for the question, which I really appreciate, but I want to actually pull it into two parts. So you were asking about the regulatory pressures that financial institutions face. That's a great question. But Deepa, what you were just talking about was also to do with the changing threats that financial institutions have to cope with. And I love the way you were talking about the ecosystem-based approach, having to draw on data outside of your institution, a kind of cross-functional approach. When it comes to what the pressures are from regulators, To be frank, that's really consistently on the same path as they have been for a long time, which means a focus on governance, structure, compliance, really fundamental pieces of running an AML program. And they are intensive, increasingly intensive. The number of enforcements has gone up over the past several years, for example. Now, that does mean that financial institutions need to cope with that, but that is not the same thing as creating the kind of enterprise, analytical, investigative, and scanning or detection capabilities to get after those threats now, those emerging and enterprise threats, those fraud threats, et cetera. So financial institutions need to do both of those simultaneously. A challenge, though, for financial institutions is that right now in the United States, there's a lot of political rhetoric around deregulation. Right now, that's rhetoric. And there's certain instances, and we can point to discrete cases where there's formal guidance about turning off certain obligations or giving a different orientation around the permissibility or openness to certain new kinds of digital financial activity, for example, digital asset activity. But that's not the same as assuming a kind of deregulated posture for your AML program. So a challenge for financial institutions is staying the course with existing regulatory obligations, as well as this need to detect crime that is proliferating in different areas, not paying attention to rhetoric until and unless that is translated into actual concrete policy guidance. One last thing I want to say on that, though, is sometimes certain institutions will optimistically hear that deregulatory political rhetoric and lean in maybe a little more than is prudent, but they are the correspondents and affiliates of all the rest of us, which opens up the potential for a different kind of risk, managing when some institutions who optimistically lean into a deregulatory concept then introduce financial crime risk into the system for all of us. So that's yet another front for the threat and regulatory pressure, given how focused regulators are on third-party risk.
Awesome. So given some of those threats, and we're here at the BAFT annual meeting, and one of the big things that we've heard a lot of people talking about is AI and how AI is used in a lot of different ways in the industry. So Deepa, from what you're seeing, like, what are some of the biggest gains that the banks are making with using AI for financial crime detection? And on the flip side, like, where are they still falling short in that regard?
So if we look at the gains, let's start with that. Banks have made strong progress in real-time fraud detection. They're leveraging AI to spot anomalies and stop fraud, hopefully mid-transaction. Transaction monitoring, TM, has become more precise with machine learning, and that's cutting down on false positives and hopefully allowing for better resource allocation. And then AI is also enhancing entity resolution, uncovering those hidden links between accounts and identifying mule networks or synthetic IDs. And in the KYC and risk profiling area, AI enables smarter onboarding and continuous monitoring using broader dynamic data. But there's also shortfalls there. This is what we'll get into next, is one key gap is explainability. So many AI models are still black boxes, in quotes there, making regulatory compliance and internal validation challenging. Legacy system integration also remains a bottleneck. AI struggles when data is siloed or outdated. There are also concerns around data quality and bias, especially when training models are based on incomplete or skewed data sets. And then finally, there's a risk of over-reliance on automation. AI should support, not replace, human investigators. And this is very important, especially in complex typologies like trade-based money laundering.
Given, how quickly everything's evolving in that space and kind of the race, so to speak, between detectors and fraudsters, Elizabeth, with all that complexity in cross-border compliance, how do you see kind of that global coordination evolving or breaking down in the AML space?
It has in the last several years, so many years, particularly the last US administration, the last European in particular political regimes, featured a lot of coordination internationally, particularly on things like sanctions evasion, where a very particularized way to see where there's coherence or diversion, in that we're talking about lists, for example. Do the lists match? Do they not match? But when it comes to AML, there's been a lot of shared principles that feature in the regulations in the, let's say, G7 economies, like the economies of the biggest banks. It's about half of the global economy, if you will. But while there's similar concepts there, of course, there's some differentiation in the way it exists in jurisdictions, and also there's an uneven enforcement profile. So right now, though, we do see interest in revision and updates to AML laws in the United States. A lot of that deregulatory energy, we'll see where that translates. And then also in the EU with the focus on the new AML function and the legal review and update. While they're dealing with many of the same concepts, and all of these jurisdictions are interested in the guidance and looking to some of the guidance of, say, FATF or Wolfsberg, and understanding where their core principles are, they're not coordinated as such. So the European and the US efforts towards AML revamp and revision are not coordinated, which will probably, odds are, lead to some new forms of friction, which for multinational firms creates new challenges. It's a bit of a boon for professional services of all stripes who are helping to navigate legal complexities or conflict of law, even to the point of, and I've heard financial institutions talk about whether or not they need to rethink some of their legal entity delineations in order to best manage. There's also recusal issues which can come up for certain multinational institutions. And this is even just on the basics of an AML program, to say nothing of what Deepa was just talking about, this opening up new front. These are new kinds of detection models. There's going to be a new approach towards data validation, model validation, and data quality assurance, the explainability. It's a whole new front on top of and beyond some of the basic frictions that I was just mentioning about in these different jurisdictions. So the direction of travel here is not towards greater coordination. The story has yet to unfold in front of us over the next year or two to understand just how great the friction may be. But it has definitely captured the attention of member banks or of major players globally as they're trying to navigate and understand how to position themselves in this very dynamic moment.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
So given this idea of kind of needing to coordinate around geographies, different things there, and given how fast the technologies, the methods, and everything are evolving, Deepa, from a BAFT point of view, how are you supporting a lot of those BAFT members in balancing innovation really with compliance?
Well, there's 4 areas that we're supporting our members in. The first is thought leadership on emerging technologies. We publish white papers, best practice guides, and regulatory updates on key innovations like artificial intelligence, like ISO 20022, digital assets, real-time payments, trade digitalization. These resources help our members understand how to adopt new technologies responsibly without compromising risk frameworks. BAFT is a platform for sharing and collaboration so members can learn from each other and we can transmit that knowledge to them. The second is facilitating industry collaboration and harmonization. Through its various councils, committees, working groups, and global conferences, BAFT brings together banks, fintechs, and regulators to align on practical approaches to compliance. For example, BAFT's engagements on ISO 20022 and stablecoins have fostered dialogue around interoperability and regulatory consistency. Another area is advocacy for even regulation. BAFT advocates for regulations that support innovation while being risk-based, activity-based, and even, particularly in areas like AML and KYC, digital identity, and trade finance digitization. It pushes back against duplicative or overly burdensome requirements that hinder modernization. And lastly, we support compliance through education. So we offer training, webinars, panel sessions on navigating the evolving regulatory landscape, often with practical case studies. This in turn empowers our member institutions to stay compliant while pursuing digital transformation and fintech partnerships.
So, Elizabeth, I want to turn back to you. What's one common misconception about AML risk or a bit of guidance that you wish more institutions understood?
To answer that, what I want to do is a tiny wind up based on the really valuable comments that Deepa has just offered. We've been talking about this dynamic landscape for the threats and the tools and solutions that will need to come to address them, and where there is also an opportunity, even necessity, as you're just mentioning, about speaking to policymakers, providing thought leadership about where that balance point should be from a regulatory or policy perspective. So here's my misconception. The FATF guidelines, the Wolfsberg principles, the US Congress all say that both compliance and examination for AML risk, financial crime risk, should be risk-based. That's the idea. In practice, and here's the misconception is that it's risk-based because we talk about it all the time. In practice, that's not really what's happening. There's a standard for excellent performance in every domain. There's a prioritization of many kinds of financial crime or threats held one against another, against another, against another. And while surely all of this work may be worthy, all of these aspects of a program deserve attention, that's not risk-based. To not have priorities or to identify what is a greatest risk or what may be of greatest use to law enforcement, something we're obliged as financial institutions to do is to provide highly useful information to law enforcement. I think because of this dynamic environment with rapidly proliferating threats and the opportunity to address those with solutions, what we truly need is to bust through this misconception that the nature of this regime and the way our programs are constructed is risk-based, and we need to actually move in that direction.
And one of the things that we keep hearing at this conference has been this theme around uncertainty, and not everyone knows what's going to come down the pipe next week, let alone 6 months or a couple of years down the road. So just kind of as we wrap up here, looking ahead, what's one really priority or mindset shift that you believe compliance teams need to embrace to stay resilient in this really uncertain environment in 2025? So Deepa, we'll start with you.
Well, if I were to say one thing, I would say embrace technology as a compliance ally, not a threat or a burden. Rather than fearing automation, which has been happening more often than not, compliance teams should lead in shaping how AI, blockchain, and reg tech are adopted. Technology can streamline monitoring, reporting, and investigations, and that frees the teams to focus on higher risk and strategic decisions.
Elizabeth, same question over to you. What can compliance teams do to stay resilient?
Can I vote for Deepa's answer? I like that a lot. But just to add on a little bit more and push it, I also want to come back to the last thing I said, which is we do, as an imperative, need a risk-based approach in this moment, including in order to embrace innovation. It takes a focus on risk to be able to get over the hump in order to incorporate new methodologies and techniques, new solutions into our system. But the mindset shift here is that for compliance professionals who are accustomed to solving for the law and regulation, that's the job in compliance, right? That's the job. Nevertheless, having a shift to understand ourselves as change agents and as actively part of a conversation, stakeholders that can help create a different framework approach, a different concept of a target state and actively be part of that conversation. So there's a new program rule conversation afoot with the new administration. That is the foundational regulatory basis for why we have AML compliance programs. That is a great opportunity to adopt that shifted mindset, including to embrace new technology for compliance solutions and let your voice be heard, get involved, be active, and not just accept that we are merely solving for existing regulatory expectations.
Amazing. So overall, digitization is changing the way things work. We need a lot better coordination across the industry, but that's not the entire thing. We also need banks to build up their internal processes and whatnot. Deepa, Elizabeth, thank you for being here.
Thanks.
Thank you so much.